Hello, welcome to the Closing Beat, everybody. Happy Wednesday to you. This is kind of like take two in a little bit. I want to share something here with you. Let's go over. This is the current weather in our home state and, of course, our home area. And if you're not familiar with where we're at, we are between Tampa and Clearwater. So if you're in Tampa and you want to go over to the beach, you're going to pass Jazz Wealth. Come on by and say hi. Well, if I press this little button here, look it. Oh, it's not so bad. That's not so bad. Everything's fine. Then we hear lightning and thunder and powers flickering and everything. Look at this sucker building up. And then as we go into the evening here, it is even getting stronger right over the top of us. Look at it right there. That's Jazz Wealth right there for you. So apologies. We just want to make sure to still get this out. We put a lot of effort into this show every day. We want to make sure you get something out of it despite some nastiness headed our way and kind of over us at the moment. So if you hear it, my apologies for that. We are financial advisors here at Jazz Wealth and do appreciate you guys checking us out. Small fish in a big pond and all that good stuff. And we love to teach. So if you're one of those that says, my advisor's not doing anything and I need some help or whatever, hey, we're here. We can help you with anything along the way. Hope you'll check us out, jazzwealth.com. All right. Did you catch it, by the way? So if you're an avid watcher of the show, we go over here. Here's the average return by day so far for the year of 2023. I shared this with you last week. Wednesday typically is a negative day. Not a bad one, but it averages a down move. And what did we do today? We averaged a small down move. For that matter, what did we do yesterday? A very, very small down move. End of the weeks tend to be more positive here for the markets, and the point being that things just are playing out as they should. Now, today's a little different. Kind of felt like a pre-Fed day because of course, we have the House voting on the debt ceiling tonight, and, you know, it's the whole Ross-Rachel thing. Will they, won't they? Will the Republicans get on board? Will they not? Will they be divided and all that stuff? It's going to be just fine. I actually did a class last week talking about the debt ceiling to specifically go over what would happen, and it took all the games and politics out of it, and so this is just how it's going to go, and spot on. So if you watched the Jazz After Dark and you wanted to know what was going to happen, everything has played out so far, even down to the Treasury extending their deadline. We even mentioned that as well. Now, market-wise, not too bad, right? We're still waiting to get things done over this breakout area here, but the volume is low. It's expected to remain low. Maybe a little action tomorrow, depending on the vote here tonight. We've got jobs numbers showing a tightening labor market out there. Of course, the debt ceiling vote. And so the market today had no reason to really get going and do anything special. You also, by the way, had no help from your leaders. What'd we talk about? Stocks that go up too far too fast will pull back. That is a given. It is not an opinion. It does happen. And so today, NVIDIA pulling back, well, that sucks. That was part of the reason the whole market was going higher for a moment there. Not anymore. Starting to pull back as little as it did today. I mean, it's a big pullback, but still, compared to the move, it's a fine pullback. What happens when a stock gets too far too fast? You encourage greed. There's no fear. We're all happy. You encourage greed. People that say, I'm not a stock trader and I was really a long-term investor, but licking their chops, they take some profits. That's what causes that selling in there. You know you do the same thing. Don't even play with that, you know? So no help from them. The stocks that brought the market higher took a breath today. And remember, the other stocks in the market, the other 490 stocks go, we're not doing anything, so why should we help? And these stocks, like AMD is an example, even Meta, which kind of tried to get something going today, not the oomph that we've been seeing out of those big names. And because of that, you can see the actual market performance, like what's really happening out there. Now, we're still able to, it's the end of the month, so we're still able to squeeze out what will be about a 1/3% gain for the month of May. That puts us up about 9% year to date. Nothing to sneeze at, so happy to see that. And like I shared yesterday, it's very easy to see where the growth is coming from. We manage our own funds here. So when we look at all of our funds and we go, well, that's doing fine. That's doing fine. That's attached to bonds. So that's a little bit weak at the moment. And then holy cow, the large cap growth fund is up 3 times more than the stock market itself. Well, you guys don't have to be a genius to guess what stocks we hold in our large cap fund, right? I'm not allowed to tell you publicly. I can share with clients, and of course they could see everything, but you don't have to be a genius to guess where have we been invested. What does that mean? In particular for you, look at your large cap funds. Go in your 401k. Take a look. It may be time to rebalance a little bit. You certainly want to pay attention to that. Now, where does the market go from here? We've been spot on with this here lately, and I want to keep that with you. So we have an S&P that kind of broke out and refused to get going. We talked about that. That was spot on. Now, what's everybody else thinking? They're all thinking the same thing you're thinking. Holy cow, large cap is killing it. Got some good profits over there. Maybe I'll take a little profit off the table. You also have something you can look at. You ever notice? So up here, we're using the E-mini S&P futures contract to show the S&P. Most of you probably use the SPY. Nothing wrong with that. Just another thing to look at. I use the E-mini S&P because we can actually follow the cash movement of the players in the futures market. And we can see that right now, this is not a survey, by the way, as the title says. This is the actual betting, for lack of a better word, betting that's going on in the S&P. 17% or 16.94% is positioned short. If this were a survey, it wouldn't seem so impressive. 17% is positioned short. Remember, anytime someone gives you a number, you go, is that high or low relative to history, relative to itself? Is that a high number? I don't know. 17 doesn't sound so scary. It is the largest number, most bearish that people have been on the S&P and actually making that bet since 2007, just before the great financial crisis. Remember that little event in time? And so people are not, or I should say the big boy traders are not betting on the markets to move lower. Remember I told you the other day that there was a higher probability of the market moving lower than higher? Yeah, that's part of it. People moving money to be more safe. So keep that in mind. And just for fun, since this is something that comes out once a week, I don't know what's going on over there, but lean hogs. People are the most short that they've been on lean hogs since the same time period there, 2007. So cattle, for whatever reason, is net long, and net short, we got these hogs. I don't know. I don't keep track of that stuff, so I couldn't tell you, but kind of fascinating, right? All right, the NASDAQ, of course, you're going to see the NASDAQ have a down day today. The big guys that brought it up there pulled back, and of course, the NASDAQ in the very short term is very extended. It's up 30% year to date, not complaining about that. About 1/3 of the returns came in just the last month. That rapid ascension of price in anything in life, remember that I said that, a rapid ascension in price for anything that you're looking at is not sustainable. Pick something and we'll go over it. So never chase that sort of thing there. Also, to kind of just wrap this up, it occurs to me that I shared yesterday some data with you and we did not compare it to where we were before. So I'd like to do that. Nobody commented on it, surprisingly, but that's okay. Remember just a little while ago, I said, look at the money, and I shared this data with you. So we've got $282 billion moving into money market funds so far year to date. And that was as of March 15th. I had shared it with you on that next day. So we have $282 billion. Well, yesterday I said, oh my God, look at all the money going into money market funds. And I did not compare to where we came from. Year to date as of, it would have been Friday, Friday, $707 billion moving into money market funds. Not a month and a half ago, it was only 282. Again, to the rapid ascension of something moving to an asset or to a direction or a particular stock. We were at 282, we're now at 707. That again goes to show money that needs to be safe or wants to be safe is not participating in the stock market. That is a huge amount of money that we need to get the stock market to move higher. And we know that it's not going, that it is coming from the stock market because of the increase, or I should say the further decrease of money leaving equities. So rather interesting there. I just want to make sure I pointed that out, because when you compare it and you go, is 282 a big number since March 15th? Yeah, that's a big number compared to other years. But then when you see now we're at 707, people are protecting their money. That's not a fear trade. That's not me trying to get you all worked up and everything. That is people saying, I no longer need the risk of the market, thanks to the Fed, I guess, and what they've done with my interest rates. All right, quick little rundown of some stocks in the news. American Airlines, good day for them. They raised their guidance, cheaper fuel, more demand and higher ticket prices. This is not a very complicated industry to figure out, and that's exactly what they said. Boeing, I don't follow this often as of late. Boeing said 787 Dreamliner, we were building 3 a month. Now we're building 4 a month. That's a good thing. Occidental Petroleum gets another, now this is not today, right? This is, so you go, why didn't the stock go up? This is not today's news. This is just reported as of today from when we can see the filings that this happened. Warren Buffett buys another 4.7 million shares of Occidental Petroleum, diving into and following through with his comments of what he would do. Advanced Auto Parts is going to be on any radar for someone who looks at stocks that had big moves for the day there. These guys have a little bit of an issue with cash burn, inventory, and costs of their products there. Other than that, they're very bullish about what's happening. People are keeping their cars longer. They were choosing to fix them themselves or buy the parts and have somebody fix them. The trouble is they are now burning $375 million in cash so far, just over the quarter. Okay. Well, if you have enough cash, that's not a problem. They have $220 million in cash and what they call cash equivalents, or liquid crap that they can sell or get access to lines of credit or whatever. So you're burning through 375. You only got 220 to go. If you burn through 375 in a quarter, you got 220 left. That gets you about a month and a half, right? So if you're looking at that stock today, that is what has, you can strip out all the other garbage that's in the transcripts. That's what everybody's chosen to focus on. Hey, do you like options, do you? I say that like David Letterman. Do you like options, do you? Yeah, that's how he said it. Tonight on Jazz After Dark, we are going to get in some option geekery. A lot of people ask for studies revolving around selling covered calls and different option strategies, and then comparing that performance to just holding an investment anyways and seeing what the return would be. We're going to go through everything. So I'm literally going to go through the volatility. We're going to do Sharpe ratios. We're going to show your average, your median, your returns. We're going to show your average premiums that you would collected based on different strategies. We're going to go nuts there. So if you want to join me tonight, I think the options investors or options traders will really enjoy that. I have about 3 minutes to go, it looks like, before the radar, if it's telling us the truth, comes down and slams on us. So I'm going to get out of here. You guys enjoy the rest of your day. We'll see you tonight, right, on Jazz After Dark. I will be there, and thanks for watching.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.